Before you watch this, understand something important. This isn't hype, it's positioning. Oil is about emotion, it's about timing, supply pressure, and geopolitical reality. In this video, Wall Street Trapper breaks down exactly how he'd deploy a first 1,000 into oil before February 1st, when seasonal demand, global policy shifts, and market sentiment start to collide. This isn't financial advice. It's a framework. Pay attention to why capital moves, not just where it moves. If you're serious about understanding energy markets and how smart money thinks early, this is a breakdown worth checking out. Let's get into it.
What's good, family? In this video, I'm gonna show you exactly how I'd invest my first $1,000 into oil before February. Using this geopolitical shift and everything that's going on in Venezuela, because most people truly don't understand it. They see the headlines, they hear the headlines, but they don't know how to position themselves. This is not a trade, this is a long-term positioning move. Now, I'm gonna break this down into three real essential parts. Who benefits first? Who benefits the most, and exactly how I'd invest my $1,000, and I'll break that up. Before we get into that, let's like and subscribe to this video. Please help me get this to 1,000 likes, because 1,000 likes truly helps this video go viral. It helps this video move, and it helps the channel keep growing. I want to tell y'all thank y'all, and I appreciate y'all. Now, let's just get straight to it. Right now, people hear oil, and they think it's about prices going up next week. Or how can I make a quick dollar? This is not about control. It's more so about access and infrastructure. Now, when the U.S. took control of Venezuela, the leadership structure, the headline wasn't about politics. It was truly about leverage. Remember, we need bread, and we need a lot of it. Because Venezuela doesn't just have oil, it's the largest proven oil reserve on Earth with over 300 billion barrels. That's leverage and that's powerful. Now, in comparison, the United States has about 68 billion. That's a huge number. But here's the part that most people miss. Oil really isn't easy. Yes, it's not easy. It's not Texas. It's not Saudi crude. Venezuelan oil is extra heavy. It's really closer to tar than it is liquid. So you need a lot of things to happen. Pipelines, oil reserves, drilling. And that really changes who wins this game. As investors, all you hear is oil, oil, oil. And you think, yep, quick money. But this can be a 5, 6, 7-year process before this happens. But capturing it actually gives us the access that we need. Now, let me be clear before we go any further. Even if the U.S. controls access, production does not turn overnight, right? This oil requires a few things. Steam injections, we're going to talk about that company. Specialized drilling, we'll talk about that company. Advanced technology, that's the one I really want to dig into. And massive refining capability. So if you're looking for a quick flip, I promise you this probably isn't the video for you. But if you're looking for a great investment that can probably position your portfolio strongly, then you're in the right position. Now think about it like this. Oil has cycles. It doesn't reward speed, but it does reward who's in position. And the companies that benefit aren't randomly oil stocks, right? They are operators, they're service providers, and they are refiners. So here's the framework that I would use investing my first $1,000 into this. First thing is, I will want the technology. I will want exposure to that technology, because technology is what makes production possible. These companies are in position on the ground. They already there. Logistics, cleanup, refiners that turn heavy crude into cash. This is how we see where the money is going. This is how we avoid the guessing game. And so that's how I truly deployed the $1,000. Now, let's just go through the list of companies that I would specifically put my eye on, and I have my eye on. And then I'll break down truly how I'll put this $1,000 to play. And it won't be all equal, right? If I had to pick one company that makes this entire story work, it would be SLB, formerly known as Schlumberger. Now, here's the real simple truth about this. Without SLB, Venezuelan oil really stays in the ground. That's right, it stays in the ground. Every company does something specific. Now, they own the technology for the steam injections that enhance oil recovery and the complex reservoir modeling that's needed. Because Venezuelan oil is so thick that you cannot pump it like normal oil. That's the thing. It has to be heated. Then you have to break it down and you have to engineer it for extraction. And that's where SLB thrives at. They are the only company that does that. So that positions them first. And this is why SLB isn't just the hype like everybody else. It is 100% a necessity stock. Now, if production scales, SLB gets paid. And that's where you want to position yourself with them. Now, number 2 on the list is none other than the big dog Chevron. We got to go with them because everybody else left Venezuela a long time ago. Everybody. Well, Chevron, they decided to do something different. They decided to thug it out because they understood what was possible there. And for whatever reason, the CEO made a good idea. Because they're already there, that means Chevron already has existing licensing, operational experience, and they have infrastructure familiarity, right? So when access opens, Chevron doesn't have to start from zero like everybody else who's going to run them. They're already there. They already know the terrain. They already know what it takes to be seen. This is why Chevron really isn't flashy, but it's reliable in this situation. So if all production ramps, which it probably will, Chevron will participate and they'll be early on the ground. Now remember, Trump already put some things in place before to back oil companies. Who do you think now takes advantage of this? 100%. So number 3 on the list would be Halliburton, right? This is the logistical machine, right? Now, Halliburton doesn't get the spotlight, but they get the contracts. And this is where the money starts to move at. Remember, every company has a specific role and positioning in this. They handle the drilling services, the well cleanup, the logistics, and the operational scale. Now, I'm going to tell you something about that. I don't know if you all remember the BP oil spill that happened, right? But I worked on that. And I'm going to tell you something. Oil cleanup is not, it is a messy situation, right? I worked on that for 3 months. We was working 7 days a week, 12 hours a day. We had to wear these Tyvek suits, and that oil gets really, really, really thick. So that cleanup, we had to get certified. We had to do so much for that. And so when I thought about this company, I was like, oh, I know what that looked like, right? Because we was part of that. So this is going to be good for them. So think of Halliburton as the company that turns theory into execution. So when production begins, Halliburton gets busy. They come in, right? And busy means more revenue. They're going to come in and do all the things that the other companies don't do. Remember, one company doesn't just do one thing, right? These companies all do something specific, and this is why I will position it this way. Now, last on the list is Valero. Now, again, after this, I'm going to break down how we'll split the $1,000 up. Let's talk about Valero for a second because production is only half of the story. Again, we talked about Venezuelan crude oil being really heavy, and most refiners cannot handle it. That's right. Every refiner does something different. And I know you thought Exxon and Shell. Notice I didn't mention these companies, right? They specialize in heavy refinery of crude oil. Now, everybody doesn't do this, right? So when cheap crude oil flows in, Valero, watch this, their margins expand. They don't need oil prices to skyrocket. They need input costs low and refining demand high. So all they want is their refining demand. And this is how profits show up downstream. And so this is how these 4 companies will really position themselves to truly benefit from everything that's going on right here, right? And this is important. So if it's me, I'm looking at these 4 companies, I'm saying, how do I split up $1,000 right here? So I'll be honest with you. My first $350 will go to Chevron because they're already there and they're going to have less headache. My next $300 will go to SLB because they are needed. So those 2 will be my big dogs. I will put $200 in Halliburton and then I will do $150 to Valero. And it's not equal because I'm being intentional, not because every role is equal, right? And we know that. And I have one more thing that I'll do, but I want to say this first. Technology unlocks productions, operations scale it, then logistics support it, and then refiners monetize it. Now, if you didn't want to do all that, what I would do then is I would take and put 70-50 into XLE Or I would put 500 in XLE and then another 500 in OHI, and that would truly give me the ETF route. Now, layer this with what's happening right now. The Fed is cutting rates, liquidity is increasing. We know that, right? And energy demand doesn't slow just because markets wobble. Energy demand is going to be at an all-time high, and this is how America positions itself. AI needs power, manufacturing needs fuel, and logistics need energy. And of course, we know that America doesn't produce enough of it. Now, we know that China and Russia, everybody's going to be in a race to get this energy for AI. So this was a strategic move by America, right? So this isn't about fear. This is more so about preparation. So I don't need you to feel like you got to catch the flying stock right now. I want you to slowly say, hey, how can I scale myself into this with my $1,000 and sit back? And let me say something that's important about this too. These companies pay some great dividends. So I'm not telling you that all goes straight up. I am telling you that this move will take time, but because you understand that America has seized it, this will be profitable. And then we just watch the energy sector all throughout the year. And the people who win aren't the ones who react, they're the ones who position. So this is not gambling. This is all about ownership. And once we understand this is how we build strong portfolios that take us over the top, that take us to the end, this is truly how we position ourselves to truly take advantage of things that are happening, and we don't get caught up in the hype. Now, if this video helped you understand the setup, not just the headline, man, hit the like and share this with you on mine, man. Right. And if you want more breakdowns like this, man, just subscribe and tell us in the chat which one you like. It's your boy, the Wall Street Trap, and I want you to remember this. Remember this, y'all. This is going to be essential. The market doesn't reward panic. It rewards preparation. It's your boy, the Wall Street Trapper. Salute.